Welcome back. I'm Pratap here. Today is 20th October 2023. Just don't bother about this clock time. Just a few minutes back, the time is changed. But we are discussing about 20th October 2023 data. So this is an interesting video. In this video, we will be discussing about entry buffers introduced in NeoStock software and how it is going to helpful to you. I will explain. We will also discuss our HLQ trades generated in our yesterday's report and their performance. So 4 trades got triggered and 4 got successful. And in that one stock TATASTEEL, within 5 minutes it gave an entry and it reached the target. But I want to check how many of you are having guts to accept that intraday trade. We got the entire trade is finished in 5 minutes. Why I'm saying we are having guts, we will discuss once we get into that discussion. So apart from this, in the same video, I will be generating the daily reports as well as the weekly reports because today is also an end of the week. So I'll be generating the weekly reports in the same video. If possible, I will try to give you the time of these concepts in the video description. If anybody wants to directly refer the weekly reports, you can click the time interval and you can go to that time location. I will try to provide based on my time availability. And if any of the new members are attending this video without having demand and supply zone knowledge, my request is first you complete the course. We are providing a free training. You can go to the NeoStock homepage, the YouTube homepage. You can click on this home. You go to the YouTube, NeoStock YouTube, and click on this homepage. Just scroll down. You are seeing a section called Supply Demand Zone Price Action Course. You just go to this playlist and all the videos we have posted so far, they are available here, and the future lessons also will be available under this section. And this video, the content in this video is helpful to the people who already completed or who already learned demand and supply zone concepts. Maybe if you want to listen, you can listen the video, but the thing is, I don't know how far you will be able to understand. For the people who are learning the course, I'm talking about the people who are learning or who are attending this training program. Because most of these concepts are based on the advanced concepts that you will be able to understand only after completing this entire training program. Excuse me. First, let us start with the high liquidity zones triggered from our yesterday's list. First one is ULTRACEMCO. Let me open. Sorry. Let me open the futures chart. It is having better clarity on the trade setup. Anyway, we are taking the trades in the futures, right? This is a short trade. This is our daily high liquidity supply zone. And the first time prices reached this zone, but already there was a rejection earlier. So let me go to the lower time frame. Sorry, this is daily. Let me go to the 75 minutes time frame. So here we have a 75 minutes supply zone inside daily high liquidity zone. We don't have a supply zone exactly at the low of this daily demand zone. If you are accepting a trade, your risk will be increased. Because sometimes, what happened the first time, it just reach here or may go a little inside and then prices will go down. But if you are in a position to accept this high risk, you can take an entry here. But when we are getting many trades from our, with the help of NeoStock software, so you need not worry why you want to take a high risk unnecessarily. So we got an entry here. But where is our target is supposed to be? It is supposed to be this 75 minutes demand zone. But are we looking for a short-term trade? Those who are looking for short-term trade, you can look for this target. But we are also looking for intraday trades also. I'm not forcing you to go for intraday. I'm just checking during the intraday how much performance our zones are high liquidity zones are giving. So that's why every day we are checking for the intraday targets. It doesn't mean we have to limit ourselves to intraday. Please remember this point. This should be our actual target. But intraday itself, it is giving a good target. When it is giving a very good when it is giving a very good return during the intraday, why you want to hold for more days? You can reach, once it reached the intraday target, exit and look for some other stock. This is one possibility. Okay, 75 minutes. If you are looking for a target, probably you need to wait for 2 days or 3 days or maximum 1 week. If you want to go for intraday, what you have to do, either look for a 15 minutes or 5 minutes. So go to the 15 minutes chart. (15-minute), we don't have a supply. Again, you have to wait for 75 minutes only. So that's why I'm going one step below, that is 5 minutes. And 5 minutes, we have identified a demand zone, which should be our target. And today it reached the target. At 11:10, it reached the target. Do you know how much return it has given? 20,030 rupees. 20,030 rupees it has. That means it has given 20,000 rupees nearly. Do you know what is the return on the investment? It is 13.26% return. 20,000 rupees profit, which is equivalent to 13.26 return on our investment for one future lot. It is an excellent return. Within 2 hours, we got this return. Just 2 hours. But the problem with the trade, it looks everything amazing, right? But the problem, we got the entry exactly on 9:15 candle. Look into the 1 minute chart, you get clarity. This is 9:15 candle. Most of the time, probably the first 5 minutes or 10 minutes, we will avoid most of the time our trades. But if anybody placed your order earlier or before, and if your order is triggered, probably you would have been a lucky person. Because mostly I select trades only after first 5 or 10 minutes. The reason is the volatility during the first minute is unpredictable most of the times or many times. Just to avoid that, and another reason is sometimes what happened if there are any unexpected events happened in the previous day. Next day there could be a huge gap, and which and it will hit our stop losses if you place any trades. To avoid that, these are all several reasons why the first 5 minutes or 10 minutes, the reason for avoiding. But if anybody would have placed an order, and if it is triggered, probably you would have been a very lucky person. But okay, let us think from our high liquidity zones point of view. Forget about our trade is executed or not, or we placed our trade or not, or we missed our trade or not. That is a different question. Here the question is the performance of our high liquidity zones, how well they are working, how they are preventing the price go beyond our high liquidity zones. Basically, high liquidity zones are turning the price direction. See, the moment it reached this supply zone, price direction is changed. Now it is going down. Earlier it was moving towards the supply zone. Now there is a high liquidity. High liquidity means what? There are so many pending orders. There are so many pending orders. Lot of liquidity is there in that area. And because of these pending orders, pushing the price down. But how do we know there are so many pending orders? Because we developed some special algorithms by analyzing the historic data and the price movements based on our supply demand zone principles. And we were checking many patterns inside that, different conditions. Based on all these things, our software is evaluating all these conditions. And finally, it is able to identify this is the area where there could be more pending orders. That way, our software is predicting. Okay, this is about ULTRACEMCO. Next one is APOLLOTYRE. And look into this stock. Today it came down, got an entry, and then again it reached the target. So let's look into the 75 minutes time frame. So in this candle, we got an entry here. Even though we took an entry here, it went a little deep. Why we took entry here? Because it is a fresh zone. See, most of the time we observed we are taking type 2 entries, type 2 proximal line entries. Most of the times, that is inside the high liquidity zone when we find a fresh zone. Why we are going for type 2? To minimize the risk. See, if you take type 1 entry, how much risk? You won't get the reward. But you may ask a question, if you miss the entry, yeah, if you miss, okay, fine. The other stocks we are getting entries. At least some of the stocks we are getting entries every day. Today we got entry in 4 stocks. One of these stocks you would have got a very good return. Okay, when exactly we got this entry, when we got when it reached the target, to understand, let's go to the 15 minutes or 5 minutes zone. This is 1 minute chart. Nothing wrong in looking into this. When we got the entry, in which candle? At 11:57 candle we got the entry. 11:57 to till 12:10. The price moved in this zone. Definitely one of these candles you would have got the entry. And when it reached the target at 12:55, 11:57, that is almost 12 o'clock, and 12:55 or 12:56, that is almost 1 o'clock. Within 1 hour we got it reached the target. Do you know how much return it has given? 7,990 rupees. That means close to 8,000 rupees profit it has given. You know what is the return on the investment? 6.3%, which is a little above our average return on investment during the intraday. That is 6.1% is our average return on investment by our high liquidity zones. So it's a good trade. It's an excellent trade. And also we got one more trade, TATASTEEL. Let's look into the TATASTEEL. Sometime before I told you, within 5 minutes we got this trade. And also I asked you, whether we can have guts to accept this trade during the intraday. I mean during the intraday, not for short term like 1 day or 2 days or 3 days like that. Yeah. My question is about intraday. My question is, do we have guts to accept that intraday trade? Okay, it looks fun, like a fun, but you will understand why I am asking this question. Before showing the chart itself, I am telling you, I don't have the guts to accept the trade. Even though it has given entry and a profit within 5 minutes. Let me tell you, once we get into the chart, I will tell you how much profit we got and return on the investment. TATASTEEL. This is a high liquidity zone. It is already tested once. And this is the second entry. And this is the entry and this is the target. Because it is already tested, we are going deep inside. Let me show you the 75 minutes time frame chart. This is the 75 minutes time frame. Because it is already tested, again deep inside, we have fine-tuned at 15 minutes or 5 minutes level. Actually 15 minutes is not very clear. That's why I fine-tuned to 5 minutes. So let me go to the 5 minutes chart. How we fine-tuned? First let me show you. We have a drop candle. It is a failed ERC candle. We already discussed failed ERC candles in our supply and demand zone price action training program. So which is a drop candle, and then we have a base candle, and then we have a, let me zoom it, you will get clarity. See how big it is? That's why failed ERC. Failed ERC you can use in the leggings. Legout also you can use failed ERC, but there are so many rules are there. When you have to accept, when not to accept. All those things we discussed during our advanced discussions. Now it is not required. So it is a drop, base and rally candle. So we have drawn this 5 minutes chart. So this is a deep inside the high liquidity zone, daily high liquidity zone. Why we went deep inside? Because it is already tested once. So previously just tested, now it will go a little deep inside because it has already consumed some orders earlier. But it didn't go very deep, exactly the entry we got. And see the supply zone, the target, this is our target. This is the drop, base, two base candles and drop. So that's why this is our 5 minutes. So this 5 minutes is our entry and this 5 minute supply is our target. So it just reached the demand zone and then within the same candle it reached. This is a 5 minutes candle. The question I asked you, can you dare to take an intraday trade? It is a successful trade. Okay, because it is already happened, we are saying it is a successful trade. But when price reached this level, would you like to take this intraday trade? I'm not taking about a short-term trade. Short-term trade you take today and you will wait for the next 1 or 2 days. That is a different thing. I'm asking this question. If you are an intraday trader, do you dare to accept? If you would have accepted, you got a profit. Just 5 minutes. It gave 3025 rupees profit in 5 minutes, which is equivalent to 2.28% return on the investment. 2.28%. In 5 minutes, you got 2.28% profit. It's amazing. Why I'm saying, do you dare to take this trade? See the time interval of this candle. It is at 1520 candle, almost before closing hour of the market. Just before closing hours of the market, do you take intraday trades? Definitely, I won't take. But what to do? Our high liquidity zones are working like that. Whether it doesn't know whether you take the trade or you don't take the trade. It doesn't know whether you are going to take intraday trade or short-term trade. But they are doing their job. At 320, the price reached the demand zone. Immediately it pushed up. See how it pushed? Within the same candle itself, it reached the target. You may ask me, how can you say it reached in the same target? Whether prices are coming from here to down here or from here and again it went up. So to get clarity, go to the 1 minute frame time chart, you will get clarity. See here, at 15:20 1 minute candle, the entry is triggered and then next 3 minutes, see how prices move, how it pushed. The next minute prices, that means the demand is very strong here. It pushed the price up. Next candle. Because there is a supply, we have a rejection, but it reached the target. After that, the candles played around this, near this supply zone for some time. That means this is our first candle, we got the entry, second candle, third candle, fourth candle, it reached the target. That means if you would have taken an entry within 4 minutes, you would have got your profit. Not even 5 minutes, in 4 minutes. But anyway, we would not have taken this intraday trade. I'm sure none of us might have been dared to take this as an intraday trade. If you would have accepted this trade, probably you might have accepted for holding it for next day or next 1 day or 2 days. You might have prepared like that. It is lucky to reach the target in next 5 minutes. But most of the times it doesn't happen. We have seen most of the trades, it took a minimum 1 to 2 hours or maximum 3 hours to reach the target during intraday setups. Okay, there is one more. The fourth stock successful trade is ATUL. So let us go to daily time frame. ATUL Limited. So this is a high liquidity zone, already tested once. That's why we are looking for a deep entry. Because we are looking for the deep entry, I looked for the 75 minutes demand zone inside this daily high liquidity zone. So here I found 175 minutes zone, and I'm not considering this as a base candle. The reason is if you look into, sorry, not this one, this one. This one is a leg candle. I'm considering this as a leg candle because look into the range. So it is a ERC candle, expanded range candle. As I told you earlier, we fine-tuned the zone as per type 2 proximal line entry at 75 minutes. So what I did, inside, again I fine-tuned to 15 minutes level. To minimize the risk. Why to minimize? Because I felt it is a huge, the depth is more. Even after fine-tune to the, even after fine-tuning the 75 minutes, still I felt the risk is very high. Because the risk is high, to minimize the risk, I went to the 15 minutes inside the 75 minutes. Because 75 minutes is a fresh zone, you have to look inside that only. Okay, if I feel here generally, the techniques we follow, one important point I should tell you. Instead of taking entry, you are planning to take an entry. Exit if you feel to accept this minimal risk. Because most of the times, what happens? The price will go a little below and again it will go back. And if you consider this as a stop loss, your stop loss will be triggered and your trade will be spoiled. Most of the times, what people will do? They take an entry here, but stop loss they keep here. This is one kind of strategy. That means your depth is from here to here. Instead of from here to here, it is going to be from here to here. So even though you are taking on 15 minutes or 5 minutes, but your stop loss you will keep as per 70 minutes. If you feel this is if the depth, still the depth is more depth, that means your risk is more. You can't afford that risk. Then you have to bear this small risk. If it is stopped out, you have to strictly follow your stop loss principles. You have to exit the trade. If you consider this your stop loss until this point. So how you have to manage this risk, that's all depends on your risk management, your capital and other your psychological factors and other factors, your trading principles. Okay, anyway, let's look into this today's entry. See what happened? It didn't hit the stop loss, but almost near. Maybe it could be some 2 or 3 rupees below this. You may find your distal line. Just before your distal line, maybe 2 rupees or 3 rupees or 4 rupees, just before your distal line, prices again moved up. That means the real pending orders might have been here, or whatever the supply is there, it might have consumed by the time it reached here, and the remaining pending orders pushed the price up. And here it reached the target. So let's go to the 5 minutes chart or 15 minutes chart. So today at 14 hours candle we got the entry. At 2 o'clock we got the entry. If you want to look into 5 minutes, you get clarity. Here we have a 5 minute supply zone is our target. Actually, this demand zone is a 5 minutes demand zone, because it is purely an intraday and risk management point of view. We got a better intraday 5 minutes level. We got a good reward I found here within 5 minutes. That's why I fine tuned to 5 minutes level, because this is purely an intraday trade. See, actually we got two entries. This is the first entry at 1340. At 140, we got this entry. If anybody might have missed, again it gave another second entry at 2 o'clock 10 minutes. So 5 minutes. Actually, the prices came from here, opened here, went up, and then came down. Not in the same candle it reached. To get the clarity, look into the 1 minute candle, you will get clarity. See here, in this candle, at 142, it reached this. After that, it didn't go to, prices didn't go to the 5 minute supply zone. When price reached the 5 minute supply zone? At this level. That is at 15:11, at 3 o'clock 11, it reached the target. If anybody might not be having patience to wait until this time, probably you would have exited here, because there are so many rejections, because we followed this kind of technique earlier several times. A lot of rejections, maybe in this candle or in this candle, you might have exited. That means you might have taken an entry at 2 o'clock 10 minutes, you might have exited at 2 o'clock 44 minutes, you might have exited. If those would have waited till the end of the day, sorry, let me delete this. Yeah. So those who might have waited till the end of the day, probably at 3 o'clock 11 minutes, it reached the target. Patience. But I know, I do agree. Waiting beyond this 2:30 or 3 o'clock is quite risky. If you are taking purely intraday equity trades instead of future trades, if you are going for intraday equity trades, probably you need to exit your trades by 2:30 or 3 o'clock as per our broker's guidelines, right? Because mostly I look into the futures trades. Okay, futures trades, anytime you can exit. You can exit even 5 minutes before closing the market hour also, you can exit. So, what is the return it has given? ATUL has given 6,318 rupees 75 paisa profit it has given. That means close to 6,320 rupees profit it has given. and which is equivalent to 7.04 return on your investment. One future slot is only 87,000 rupees for ATUL. So the return on the investment is very good. It is almost 1% above our average return on the investment. So this is about the high liquidities zones we generated in our yesterday's report, that is on Thursday's report. Thursday, we generated the demand and supplies based on our top-down analysis strategy builder. From there, we generated yesterday. If anybody would not have looked into the yesterday's video, please go through. We didn't generate, we generated based on stocks near demand and supply zones because the list didn't give good number of stocks. What we did, we used NeoStock's demand and supply zone strategy builder, real power we used. And then we generated the high liquidity zones from that by using the strategy builder. We defined a strategy and then we have extracted the stocks. And those stocks has given these good results. Because ATUL is identified from that list. APOLLOTYRE is also identified from that list. Even TATASTEEL is also identified from that list. Okay, this is about high liquidity zones. And I told you, I will explain about NeoStock's entry buffer concept, NeoStock software's entry buffer, a concept I introduced. Actually, I have introduced that concept for a different purpose. That is for finding high liquidity zones. I need to build a special algorithm, a special logic. And that concept again helping us in a different way for our trading purpose. I will tell you those secrets because next time when you find stocks like that, at least this information will be useful to you. To explain the concept entry buffer, I have selected the stock Jubilant FoodWorks. For the last 1 month, Jubilant FoodWorks is moving between high liquidity supply zone and high liquidity demand zone. This is a high liquidity supply zone. And this is a high liquidity demand zone. And for this concept entry buffer, let us focus on this high liquidity demand zone. Look into this demand zone. How many times this zone is tested so far? Only once, right? That too yesterday, this zone was tested. Till before the yesterday, it is a fresh zone as per our supply demand zone principles. But before that, did you observe twice the price tried to reach this high liquidity demand zone and failed to reach this demand zone? Twice it is failed to reach. This is the first candle, it is failed to reach the high liquidity demand zone. This is the second candle, failed to reach this high liquidity demand zone. Now yesterday, it is successful in reaching this demand zone. What is the reason behind failed to reach this high liquidity demand zone? This is one point you should understand. That means there is a heavy order flow from here, right? Let me draw a horizontal line. Okay. So this is the first time price reached near to this area and failed to get an entry, but prices are pushed and reached this high liquidity supply zone. Second time also, prices reached this blue color line, horizontal line area, and again it pushed the price up, and once again it reached to the high liquidity supply zone. But yesterday only we got the first entry. That means so far this zone is tested once, right? Now have a look into NeoStock's report for Jubilant Foodworks. So this is the stock, the first stock in this report, Jubilant Food. And this is having both the resistance supply zone and the support demand zone. Both are high liquidity zones. But look into this test count for the demand zone. What it is showing? The test count is 3. But look into the chart. What is the test count we can able to see? Only once. Yesterday only the price entered into this zone. Then how can this report is showing the test count is 3? The reason is NeoStock is having a special concept called entry buffer. So what is this entry buffer? This entry buffer is a small buffer. We can say it is a price buffer introduced before the demand zone or even before the supply zone. But at present we are discussing about the demand zone. Let me explain with respect to the demand zone. Just before this high liquidity demand zone, we have some buffered area, special price as a buffered area. That buffered area is calculated by using some special algorithms. It is not based on the percentage. It is based on the volatility of all these candles. Because of the volatility of the candle, that means the volatility of the price movement will determine this buffered area. And when prices enter into this buffered area, that is entry buffered area, immediately NeoStock considers the price reached into this zone. Why we have introduced? Because these high liquidity zones are having so many pending orders. What is high liquidity? There are so many pending orders. There are so many pending orders. That is what liquidity means. But the pending orders are so many. That is why we are calling it as a high liquidity. And sometimes what happens, institutions, they not only keep these pending orders inside this zone, they will also spread their orders a little above this zone. That is what the buffered area. Okay, I am calling this buffered area as entry buffer. Maybe I would have given even a better name, but okay, I felt that is a comfortable name to understand this concept. And now this algorithm, if price enters into this entry buffered area, the NeoStock software algorithm considers that is an entry into this zone. Similarly, second time also the price is reached into this entry buffer area. That's why it is considered the second test. And yesterday actually it reached into our demand zone. And now it is considered as a third entry. Apart from the price entered into this entry buffered area. Remember, this entry buffer area is not a fixed area. The area will be changing. It is dynamic. It is because the volatility is changing, the entry buffer is also changing. It is an intelligent algorithm. At least it knows when the buffer should increase and when the buffer should reduce. But okay, fine. But how this concept is going to helpful to us? If you look into the NeoStock report, before entering into this entry buffered area, price entered into this entry buffered area, the test count will be shown as 0. That means it is a fresh zone. Now, price reached into this entry buffered area. Immediately, the report changes the test count from 0 to 1. If you look into the NeoStock report, you will see the test count as 1, but actually price did not reach in this candle into this zone. Then immediately you have to realize there is a entry buffer. That means there is a heavy order flow before this zone. There is a heavy order flow before this zone. That's why we have a huge rejection from this buffer area. Then from where this price is rejected from here, probably a little above that, maybe exactly from there or a little above that. You need to assume there is a entry buffered area, because a NeoStock report is not letting you know the exact value, so that you have to assume exactly from where the prices are got the rejection or a little above that the buffered area has started. You can assume. You can draw a horizontal line, something like this. Okay, what is the advantage? You won't get any advantage on that particular entry because it is given an indication. Okay, how it will helpful to us for our trading? Next time, again when prices reaches into that buffered area, now you can consider taking an entry exactly at this buffered area, provide your risk management is permitted. If your risk management does not permit, you will ignore it. But assume for any particular stock, you have observed the entry buffer. If your risk management is permitting, if the risk is within your manageable, your manageable level, then you can take an entry just before entering into the zone. Now imagine if I would have taken an entry exactly at this blue color area, assuming my risk is manageable from here to here. From here to this, whatever I have drawn, this 15 minutes demand zone, just below, if my risk is permitted, just assume for time being. So by assuming that, I took an entry here. See what happened now? Price again a rejection. This is the first candle, second candle, third candle, fourth candle, it reached the supply. You know how much return it has given? From here to here, almost 20 rupees. This is around 535, sorry, 525, and this is around 545, which is close to 4%, close to 4% return in 4 trading days. It's a very good percentage. Definitely it could be around, maybe for one future lot, maybe it could be, I'm guessing, maybe it could be around some 50,000 or 60,000. It's a very good profit. But actually price did not reach into this zone. Still we took an entry based on the concept entry buffer. We observed currently prices are tested by the entry buffer, not by the zone. How you are able to identify? By seeing the NeoStock's report. The test count might be showing you 1 here, but here, sorry, the test count might be showing you 0 here, but here already it tested this entry buffer area. That's why the report is showing 1, but your actual zone is showing price is not reached. By seeing the difference, it is a clue actually. The NeoStock's report is a clue. What is that clue? Okay, this zone is tested by the entry buffers. That means entry buffers are managing this zone. That means entry buffers are making the price to reach this zone. The zone is failed to get the entry. That is because of the entry buffer. That kind of understanding you get. So next time again price reaches to that entry buffer area, you will take a decision. Okay, fine. Price reached, and yesterday price might have reached to this entry buffer area. So at this point of time, there are two possibilities. Possibility one, like what happened earlier, exactly the same way prices will again move up from here. That is one possibility. And the second possibility, probably it might have consumed some orders earlier, and this time maybe the supply could be even much stronger. It may push the price some more down. That is also possible. When you doesn't know what you can do, if this risk is within your manageable from this horizontal line to this distal line of the 15 minutes demand zone, if the risk is within your manageable, you can take an entry. Instead of taking entry here, you can take an entry here itself. But if you are asking me from my point of view, the risk is not manageable within my risk management level. So I have to wait until the price reaches to this 15 minutes demand zone area. And luckily yesterday it reached and got the entry and also reached the target. That is a different story. But here another question will arise. Generally what we do for high liquidity zones on daily time frame, we go one time frame lower and then we find the demand zone. Within the demand zone, we will fine tune to 15 minutes demand zone. But if you go to the 75 minutes time frame, that is one time frame below daily, we didn't find any 75 minutes demand zone within this area. We have only deep inside the 75 minutes demand zone. So fine tuning inside the 75 minutes for 15 minutes is much safer than identifying a 15 minutes which is not inside the 75 minutes. And this 15 minutes demand zone, there are higher chances of stopped out. Prices may go down below this, a little below, or further go down, touch this 75 minutes and it will go up. Then our stop loss will be triggered. Our trades will be disturbed. This possibility is there, right? Yes, it is there. But here, the reason why I am thinking this 15 minutes will definitely work, let me explain. Let me go to the 15 minutes time frame. So this is how I found a very good drop base rally candles. So reason number one, look into these rally candles. The leg out, excellent leg out. See the follow through candle, excellent. After that, these stop buffers are not letting the price go down. Sorry, the entry buffers. Sorry, I wrongly spelled as stop buffer. The entry buffers are not letting the price go down. Again, it is further pushed up. Next time when it came down, again this zone pushed the price up. Next time price entered into the entry buffer area, pushed up. Next time again price entered into the entry buffer area, again it pushed up. So we have a strong order flow. And if we want to consume this strong order flow, there should be a very strong supply also should be there. The strong supply can only consume the strong demand order flow. See, this strong supply consumed all the order flow in the entry buffer, and then only prices are entering into this demand zone. That means by the time it is entering into this demand zone, majority of the strong supply order flow might have been consumed by this orders inside this entry buffer area. So by the time the prices reaches into this 15 minutes demand zone, definitely the supply would have been weakened. This is one point always you should remember when there are entry buffers. The zone below the entry buffer area will definitely hold the prices. And the second point, we are now inside the high liquidity demand zone, daily demand zone. Definitely inside the daily demand zone, there will be so many pending orders. The liquidity is more. And this 15 minutes demand zone, even though it is not inside the 75 minutes demand zone, definitely it will be having the capacity to hold the prices. Because when institutions, when they put an order flow here, definitely before this, it could be even more order flow. Of course, when the price next time comes into the 75, it could be even more order flow will be there. This 15 minutes will work and 75 minutes also if price reaches next time, definitely that will also work. So that is the reason why I do not have any problem in taking an order. I am 100% confident that it won't be stopped out. And the second thing, already I have fine-tuned the risk at the minimal level. At the minimal level, we have fine-tuned. Even if we get a loss, even if it is stopped out, the loss is very minimal. That is another reason for considering this zone. First of all, having confidence that it won't be stopped out. Maybe the second time or third time it will be stopped out. Who knows? It may work even second time also. We don't know. Okay, anyway, yesterday trade is worked very well. And we found only a supply zone here. We didn't have any good supply here. See, if you look into this candle, it is a ERC candle. After ERC, we didn't find any base candle. That means there is no zone. This entire thing is we didn't have any proper supply zone. That's why the prices again reached here. Here I found a beautiful 5-minute supply zone which is holding the prices. Earlier it holded, even yesterday or even today also slightly pierced. Because just above that we have 15 minutes supply zone is there. This is 15 minute supply zone. So that is the reason why, sorry, let me change the time frame to 5 minutes. So here we have a beautiful drop-based drop. And look into this entire price. A lot of consolidation here. So definitely next time prices will easily pass through this till the next 5 minutes supply zone. So yesterday at what time got the entry? From 9:35 to 11:15 we got multiple entries here. Nearly 7 or 8 entries we got, because some people may not be entering into the trade during the first half an hour of after the market open, because the volatility is very high. So to avoid that, some people may not take an entry. Even those people also got an entry here in this candle. That is after 9:45. Even after 10 o'clock also. The last entry is at 10:15. And after that, see how price moved very nicely. And at 2:30 candle, it reached the target. You know how much return it has given? 12,500 rupees for one future slot, which is 9.7% return on the investment, which is an excellent. It's beyond our average return on investment for intraday trading. Our average intraday trading return on investment is 6.1%, but this stock has given 9.7%. The main confidence we are having for this 15-minute zone will work is because of entry buffer concept. Entry buffer concept not only works about this zone, even before entering into this zone, taking decisions, the entry concept will helpful to us. See, those who are, in case if you would are aware of this concept, this is a NeoStock software specific concept. Basically, it is a dynamic. It is dynamically changed its entry. Instead of this entry, it changed its entry as per the entry buffer. Now, NeoStock software is assuming the blue color line, whatever I have drawn, that is the entry. That's why it changed the test count because it hit the blue color. So it considers this is the entry. But this line is not fixed because this line is a variable line. It will be changing from time to time because if the volatility is very high, the line will go move on a little further up. If the volatility is low, it may go a further down. Based on that, in a clever manner, the algorithm will take care of how many times prices entered into the zone with the buffer. A zone having the buffer, entry buffer. And this is the real entry as per our demand and supply zone principles, where we took an entry yesterday and got the good return. But imagine if we are aware of this concept, you would have taken an entry on 9th October. And on 12th October, you would have got a very good return. Maybe it could be maybe I don't know, just roughly I'm calculating, it could be around maybe 60,000 rupees or little above or little below. Or maybe close to 30,000 or 40,000 plus. Okay, I don't want to bring this margin calculator now. Don't want to prolong the session. In case if anybody is having interest, just go to open this chart and calculate how much this entry buffer has given the return. But remember, important point, you should use entry buffer only if it is within your risk management level. If it is not permitted, if you are using entry buffer, if your risk management is not permitted, don't take entry. Just imagine, you would have taken an entry yesterday here and price went down and stopped out. How much loss you would have got? If it is beyond your expected level, see, you lost a huge amount of the money rather than what you are supposed to lose. If you properly manage the risk, the amount you lose is only from this dark green color area instead of from blue color area to this end of this dark green color area. So that's why I'm stressing on this point. This concept you should not understand in a wrong way. This concept is helpful to you only if your risk management permits. Otherwise, don't take. Focus on other stock. Because every day our NeoStock software is generating a good number of stocks, high liquidity zone stocks. Why you should focus only a particular stock where it is not helping you manage our risk properly? Look for a stock that gives a very good risk management. Your risk should be less and reward should be more. That you should not forget. Okay, I hope you got some better idea about this entry buffer. If you are still having any questions regarding this entry buffer, you can put them in the comment section. I will try to clarify your doubts. So now let's move on to generating demand and supply zones for daily time frame and then weekly time frame. For entry time frame daily, let us find the stocks which are near to the daily demand zone. So this is the filtered list. And please look into the high liquidity zones. Try to avoid pierced zones if any. Please also study the HTF trend, that is monthly trend, weekly trend and daily trend. You should also focus on the number of tests. You should also focus on curve or location. The odd enhancer score also will help you at some extent. But it is a total score comparing out of 15. So let's go back. For entry time frame daily, let us find the stocks near to the daily supply zone. So please focus on high liquidity supply zones. So let's go back. For entry time frame daily, let us find the stocks where price closed inside daily demand zone. So this is the filtered list. So this time good number of stocks are closed inside the daily demand zone. Nifty 50, Nifty Bank both are inside pierced demand zones. So total 67 stocks closed inside the daily demand zone. Very interesting. Monday is going to be an interesting day. Are these demand zones push the price up and change the market direction? Or will they be broken? Or price will be moving narrowly within those zones? We have to observe very carefully. But anyway, we are focusing on high liquidity zones. Our trade plans will be based on high liquidity zones. Okay, let's go back. For entry time frame daily, let us find the stocks where price closed inside daily supply zone. So this is the filtered list. So total 27 stocks are closed inside daily supply zone. Let's go back. Let's find the tested zones. Entry time frame is daily. Let us find the stocks tested the daily demand zones. So this is the filtered list. So total 35 stocks are tested. Tested the daily demand zones. So let's go back. Entry time frame daily. Let us find the stocks tested the daily supply zone. Only 10 supply zones are tested. Look into the high liquidity zone ZNFC. First test, but already had 3 rejections. What is zone low? The entry 667.5. What is the close? 657.1. Almost 10 rupees push. Great. That is comparing from the zone low. Maybe we might have taken a deep entry. Then the return could have been even more than that. So we didn't find this stock in our yesterday's list. Okay, it's about tested zones. Now let's go back and find the newly created demand and supply zones. Entry time frame is daily. Let us find the stocks having newly created demand zones. So these 5 stocks are having newly created demand zones. That means not much demand is created today. So let's go back. Entry time frame daily. Let us find the newly created supply zones. Oh, good number of supply is created today. What this supply is going to do tomorrow, I mean on Monday. Is it going to change the market direction? Let us see. So totally 31 stocks are having daily supply zones. So let's go back. Let us generate demand and supply zones for all the stocks for your further reference. Entry time frame daily. So I have generated the total list. I will keep on scrolling this list. Wherever you want to, whichever the stock you want to refer, please pause the video and you can study parameters of that stock. I'll be giving only few seconds each time when I scroll down. So this is the complete list for our further reference and study. Now let us focus on the weekly demand and supply zones because this is the end of the week. Now we are generating weekly zones for the weekly candle opened on 16th October 2023 and closed on 20 October 2023. So entry time frame is weekly. Now we are generating weekly demand and supply zones for the weekly candle opened on 16th October and closed on 20th October. So let us find the stocks which are near to the weekly demand zone. So these 12 stocks are near to the weekly demand zone. So let's go back. For entry time frame weekly, let us find the stocks which are near to the weekly supply zone. And these three stocks are near to the weekly supply zone. So Nifty Metals is near to the weekly supply zone. So let's go back. For entry time frame weekly, let us find the stocks where price closed inside weekly demand zone. So we have a very big list. Earlier also we have seen many good number of nearly 60 stocks closed in daily demand zone. Now let us see how many stocks are there for weekly time frame. So 57 stocks closed inside weekly demand zone. So let's go back. For entry time frame weekly, let us find the stocks where price closed inside weekly supply zone. This is the filtered list. Total 22 stocks filtered where price closed inside weekly supply zone. Let's go back. Entry time frame is weekly. Let us find the tested weekly demand zones. So these demand zones are tested during this week. Total 22 demand zones are tested during this week. So let's go back. Entry time frame weekly. Let us find the tested weekly supply zones. Only 9 supply zones are tested during this week. So let's go back. Entry time frame weekly. Let us find the newly created weekly demand zones. So these three stocks are having newly created weekly demand zones. So the bright green color indicates it is a all-time high stock. That's why Bajaj Auto is not having supply zone. And this all-time demand zone is created during this week. So let's go back. For weekly time frame, let us filter newly created supply zones. The stocks having newly created supply zones. So total 15 weekly supply zones are created for these stocks. So this is about the filtered list. Now I am generating demand and supply zones for all the weekly time frame stocks, for all the stocks in weekly time frame. So entry time frame is weekly. So this is the complete list. I will keep on scrolling this list. So whichever the stock you want to refer or you want to study, there you please pause our video and study all the parameters for that particular stock. Remember, the bright green color indicates they are all-time high demand zones. You won't be finding supply zones because they are all-time high demand zones. So this is the end of the list. So I wish the information in this video is helpful to you. Let us all meet again in our next video. Thank you.